Welcome everybody. This is the Thursday evening Viper Trading webinar. If you are here to learn about trading the futures markets using the Viper tools, you are absolutely in the right place. Tonight's topic is Know Your Numbers. First, we got to knock out our standard disclaimer, so let's go ahead and take care of that so we can get over to some charts and talk about some trading. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or the webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right, so I'm going to go over to a chart, but before we get into the trade setups themselves, which we are going to talk about, of course, tonight, is screen one. Okay, so the topic is Know Your Numbers. Everybody in here pinky swore with me and the entire team that you are going to track your numbers. So the first question for the team here tonight is, what are your numbers? Go ahead, type them in. Now, some of you might not have any idea what the heck I'm talking about. So don't worry. If you don't know what I'm talking about, I'll totally explain it in, just give it like a minute or so. We'll see people. Does anybody know your numbers? Does anybody know what I'm talking about? Does anybody know what I'm talking about? All right, we got one person. Mario is 67%. Dropped a bit due to some whippy days. Okay, good. All right, Chuck H is at 62%. That's good. How about all the rest of you? We pinky swore. Nothing worse than breaking a pinky swear. That's like terrible. 85%, Dennis. Wow, you're knocking it out of the park. Brian, 68%. My voice is coming in and out. Louis says he's having audio problems. Is everybody hearing me clear? Testing audio. Is it coming through okay? Louis is saying I'm breaking up. Now everybody's saying we're good. Hey, Louis, you might need to log out and log back in. Sometimes the audio connection doesn't, kick in just right or whatever. Yeah, just log out and come back in and we'll be good to go. All right, so let me explain what's going on here. So here's the thing. We all have to know and track our performance. Okay, so we all have different instruments that we trade. You can trade ES, you can trade YM, any of the equities, NASDAQ. You can trade gold, of course. You can trade crude. All the instruments that we trade and track inside of the live trading room. And there's other instruments you can trade too. There's 165 of them or something like that. But here's the important thing. You've got to track them separately, your performance. And you've got to check how you're doing each day. And it sounds like some of you are doing it, so that's good, and many of you are not. And, well, let me ask a different question. How many of you are, quick show of hands, really not too satisfied with your performance trading right now? You feel like you could do better? Anybody? You think you could actually do better than what you're doing right now? Me. That's me. All right. I'm going to show you how to do this. I'll show you again, and I'll keep showing you until you start doing it. Because if you see everybody here saying, I want to get better. Well, there's one thing to say I want to get better, and then there's something to actually do it. Saying it and doing it are two different things. Following through and doing it. So without further ado, let me show you what I'm talking about. And this is the number thing that we're going to show you, okay? All right. Does everybody see the control center? Right? You see the control center? Here's what you're going to do. And I strongly urge you to do it tonight. All right. You're going to set up separate sim sub accounts to track your performance separately on each instrument that you trade. That's the only way you're going to know if you're getting any better. If you're just guessing, or you have a feeling, or you think you're doing okay, then you're not on top of your numbers. You're not on top of your game, and frankly, it's going to be really hard to get better. The only feedback you can give yourself is hardcore stats. You need those numbers. Here's how you do it. It's by step by step. You go into tools. You go down to options. This little box pops up that looks like this. You go to the simulator tab. You click on the accounts button like this. Okay? A little window is going to come up. And it's going to say sim or backtest or whatever. Let's say hypothetically you want to track how well you trade gold. Okay? So you're going to type in, you can call it whatever you want. You can call it GC. Save. Now a new simulated account, GC, is created, and next time you log in, so you have to log out and log back in, and there will be a sub account called GC. Let's suppose you want to track how you do on crude. So you can call it crude oil, you can call it CL, you can call it whatever you want. Okay? So you create all these sub accounts in here. You log out and you log back in, and then they exist in your account repertoire, if you will. Okay? Now, when you go to trade, say that you were trading ES, you should create an ES sub account that you track. All of the trades that you take when you log into either Chart Trader or Object Trader or however you trade it, you click on the chart, you put in orders, buy, sell orders, they all need to go to that account. So in the case of ES, they would go to the ES sub account. Now here's what you do. You're probably saying, well, what the heck is, why I got to do all this? All right, here's what you do. You go over here to account performance. This little tool is going to allow you to go in and find out how you're doing on all your different accounts, right? So what am I talking about? Let's see here. I don't have anything in here. I don't have any information in here. Let's do that. Let me reset this. Let me do something different. Give me 1 second, please. I got to do one thing to set this up. Give me 1 second, please. I'm going to try to illustrate what you're going to do. You're going to run little micro reports on how you did each day on each instrument that you traded, and the reports, and then there's a follow-through step that you do on the chart itself. Okay, let me load the instrument manager here. Okay. All right. Okay, it's not showing it here. Let me see if I can show this as best I can. And this is how you do your reports. You should do it each day. Okay, hold on a second. Here we go. Okay, so here's what it is. Let's suppose that you can go for 2 days or 3 days or 4 days or 1 day. And you basically you go to this calendar thing right here. And on the drop-down calendar, let's suppose you want to just see how you did today on trading crude oil. Now, you would have a crude oil instrument here. I don't have crude oil on here. Dave, you said I use an interactive broker trade results in a spreadsheet. Well, that's good. You're doing something. You want to see it in currency. I didn't take any crude oil trades, so if I hit generate, it's not going to show anything. See, it's not showing anything because I didn't take any crude oil trades today, so nothing will show up. But if you did, and you tracked it separately in your sub account, you're going to see how you did. And what you're going to look at is this. You're going to key in on some numbers. You're going to look at how profitable you were, what your drawdown was, what your profit factor is, how many trades you took, long and short. Were you profitable long and were you profitable short? What was your average trade? What was the ratio? You're going to look at all these numbers, okay? Now, if the numbers are positive, so let's suppose your success rate, percentage win rate, percentage profitable is over, say, 60 or 70%. That's pretty good. That's this line right here. You want to focus in on this. So, and you want to keep a higher number of winning than losing, right? And you look down here. Now here's how you follow through on this. You print this out, okay? And then you go back over to the chart you traded, and let's say hypothetically it was ES, and you set up Chart Trader on it. Let me show you how to do this. This is the final step where you pull it all together, okay? And this is where you're going to tell what the heck you did. This might sound like a little bit of a pain, but I'm telling you, if you can do it, it's going to make a huge difference in your trading. It really is. I'm telling you. I'm just telling you. You pull up Chart Trader on the instrument that you're trading, and you right-click on the chart. You select in the drop-down here, let's say that it was ES. You set it up an ES sub-account. You traded to ES. You want to track it. You want to see how you did. You print out your little report. You come back over here. In the drop-down, you select ES. You right-click on the chart. You go here to Data Series, and you go down here and you put Plot. Plot Executions right here. Text and marker. Now, when you do that, here's what's going to happen. All the trades that you took throughout the course of the day are going to show up on here, on that account. Once you select that account and you show text and marker, every trade you took, every long trade you took, every short trade you took, every stop out, everything you took in that day is going to show up. Now, why is that important? Lewis says, I just trade oil, so this should be easy for me. You on the grid, you right-click and hit print, and you send it to your printer on this little report. I like to print it out because I like to have something in front of me to look at. I mean, you can just look at this. If you want grid, right-click on a grid. You can export to a spreadsheet. You can print it. Whatever, I've got a Canon printer here. I just put some paper in it, print it out. Now, when you come back over here, here's what you're going to find when you do this exercise. You're going to quickly spot the trades that didn't work out. Let's suppose hypothetically you got short somewhere and you got stopped out. You tried to short here and it flipped against you and you lost. You had a long trade that didn't work out. You had a couple of pullback retracements. You caught this long and it worked out. Stand by 1 second, please. It's the most amazing thing. 5 o'clock on Thursdays, religiously, there's a house across the street that the landscapers show up. They start turning on mowers and blowers and all manner of equipment over there. Anyway. 75%? Okay, so that's what you're trying to do. You're trying to see how well you're doing. What you're going to learn in the end of all this is you're going to find out what instruments you're doing well at, what type of trades you're doing well at, what type of trades you're not doing well at. So let me ask you a question. For those of you who are starting to investigate this, what type of trades do you do best at? Just type it in. Of all the trade types that we have, different trades. And what instruments do you do best at? What's your best instrument? And what type of trades do you like the best on your best instrument? Some of you might not know, and that's okay. Some of you might not know, and that's perfectly okay. But that's something you can fix by running your reports, getting to know your numbers, and then looking on the chart at the trades you took. Michael P. says, I like ES and CL with mid-band trades. Good. See, now you know that, right? Mario likes the Russell. Retrace trades on ES, Ken says. Good. Bouncing off of 3 swings. ES has been pretty good. Gold has killed me. Midband trades for Dennis. Good. See, that's you got of all the different trade types we type. Trading in ranges, trading support and resistance, phantom trades, retracement trades, midband trades. You got to know what you're good at, and then once you figure out what that is, what do you do? Well, you do more of it. Right? Let's suppose you get a deep retracement trade that goes well beyond, the bars. You're in an uptrend and it goes way deep, and you get stopped out all the time, and you just can't figure those out. No matter what you do, and you look on your chart, sure enough, that was a loser. Or maybe it's tough to spot trend changes. You're still trying to get long when the market's going down. Here, let's look at some examples on this chart here. I'll tell you what was tough is the past few days in the first 15 minutes or first 5-10 minutes. Let's take a look at ES. Let's talk about some reality here. Okay. I'm here in California, so the midnight Pacific was right here. This is right here, midnight Pacific on today. So most of you know, of course, that this is the end of the Asian trading session. And it goes into, at midnight, the beginning of the European session, which is right here. So any night owls, this is 3 a.m. Pacific, midnight my time. And so in the first couple hours of the European session, what was the trend on ES? Up, down, or sideways? So we're going to do a couple exercises together, and then we're going to go look at the open, and we're going to look at what happened on ES and the actual, right at the equity open. But I want to do this little exercise first. Yeah, it was up. The trend was up in the European session, yes? The trend was up. Right here. Right in here, this was up. So we're buying pullbacks. So I'm not going to do them all, but you can see that there were some long trades on retracements right into here. It's a minimum criteria trade. Minimum criteria trade. Bounce off the midband. Pullback, minimum or criteria met. All long trades that all worked out quite nicely. So what I'm showing you is that here is the end of the Asian session. Beginning of the European session. Midnight Pacific is right here. We went into an uptrend. Everybody see that? And here's your thrust and pullback. Here's thrust, pullback, long, etc. You see all the way up. I'm not going to do them all. You get the idea. Now I'm gonna just do this one. Yeah, I think I might have had a pause on the screen, so my apologies. But let's move on. So after about 3:45, 4 o'clock, let's look at whether the uptrend continued on ES and what happened into the open for the equity markets in the U.S. Now, in this condition here to the right, are we starting to go up, down, or sideways over here? What is the trend still up over here, or has something changed? Up, down, or sideways? By the way, for you, those of you that are visiting or you're new, that is one of the first things that when we're taking trades, we have to know what we call the market condition. And that's the market condition essentially means, is the market going up with an uptrend? Is it going down with a downtrend, or is it going sideways in a range? And most definitely you have changed to down. Notice here what happens, and you're going to see this on downtrends, is that there's an initial thrust that takes out a support level. The background generally will turn to red, and you will start to see that you'll get a series of lower highs and lower lows as the market starts to drop. So in this case here, obviously, the way we trade downtrends is we short kisses of resistance and take the coin at support. All these are short trades now. Okay, we're not in an uptrend anymore, we're in a downtrend. Here's another one right here. Now I'm going to focus. Right now, we're going to look at like a 10,000 foot level. We're just going to look at big picture stuff. We're going to talk about trends, what types of trades you should be taking. And then as we progress into the morning, we'll look at actual trade entries in detail. So I'm not focusing on that right now. We're just kind of looking at what the market's doing. Now let's move on. Here is a good example where a market went up a little bit above the midband right here. Now, show of hands. How many of you struggle with this? Particularly you midband traders who like to take midband trades. Like when the market comes way up here and you're in a downtrend, you're astute enough to see that you're definitely in a downtrend. You know you should be shorting. And you like midband trades. However, occasionally a market will come to extend itself way up out into here and the bars will turn blue. And you start thinking that maybe it's a trend change. And then you get this little wiggly do right here. Let's go back and recreate it at the time it happened. Now, of course, this is 5:30 in the morning, 8:30 Pacific, Eastern. They're probably not up trading it, but we're just looking at setups right now. At the time it happened, blue bars, triple bottom, higher low. What the heck? Are we heading up? So you're hesitant to short this, yes? Yeah, I get that all the time. There it says it's lower than the past swing. Load the boat. It's confusing to me. How deep will it go? Now, if you run your reports and you do what I said to show you with the account, showing the account, right click, show your trades. Remember we said you go to data series, all the way down to the bottom, plot, text and marker. When you come back to look at it, you might see that you tried to short somewhere in here. Or maybe over here. Let's use another example. Let's suppose that you tried to short in here. It got you in. Maybe you had a box that was too tight. I'm just making up hypothetical examples. Maybe it got you in and then came up higher and stopped you out, and then the darn thing dropped. What I'm trying to tell you is if you don't do that market analysis and run those reports and plot your trades, you're not going to know. You're not going to learn anything from that. You might have a feeling. So what that's telling you is that you have a very particular trade type that you like and you're good at. Right? That's what that's telling you. And if you consistently go in and you look at your trade reports and you find out that these deep retracements that pull way up above the midband, you struggle with these and tend to lose money on them, then should you continue to trade this type of trade? Yes or no? Now, I'm talking about individuals here. That's not a blanket statement. I'm not saying everybody in here should not trade it. I'm saying if you do your analysis on your charts and you run your numbers and you look at the statistics and you plot the thing on here, and every one of these things you took up here you lost money on, is this a type of trade you should continue to take, yes or no? And the obvious answer is no. This is the whole reason we do that exercise. You know, if you come, many of you typed this in when I asked this question. I said, you know, and a lot of you just said, I like midband trades. So a midband trade is defined as follows, okay? Anywhere with the band located above the midband, as you see right here, and below the midband here. Now, the other place you find that we take a lot of trades, and you're going to see calls on this, is line 2, which is this thin line right here. And most of you know, we'll talk about how we use it. We'll look at trades around it in line 6. So after you do your analysis and you find out that when you take line 2 trades, they don't work out so good. You take line 6 trades, whatever direction the market's going in, and they don't work out so good. But you make note of the fact, whenever those trades come up and they behave themselves right around the midband, you just nail those. Your win rate on those is I don't know, I'm going to make up a number, 75%. And the other ones are 50% or less. Okay, good. Now let's move on and let's look at how this market played out for the morning going into the open. And then we'll look at the open. So this is what I'm talking about. If you say that I'm a mid-band trader, here's an example of one right here. Came right into that band, right? What's defined as a mid-band trade? The mid-band itself sitting on the mid-band, the band above it, and the band below it. Does this meet the criteria? Yes. Now here you're kind of pushing it a little bit. Does this meet the criteria? Yes, it does. Does this meet the criteria? Yes, it does. Here's one that goes a little deeper. Now here's the open. I'm going to show you something here on something you can do that's going to help you tomorrow morning, especially on ES. I've traded ES a long time, and I've seen this forever. I'm going to show you something here that's going to help you a lot. Sometimes in the first 5 to 10 to 15 minutes of ES, you're better off just standing down. You're better off waiting because all those overnight orders are coming in, right? All the market participants who are going to trade ES are throwing algos at it. Bars are shotgunning up and down. You know, it's hard to see where you want to get in and out. And you wind up getting whack-a-mole at the open, and then by the time you get to 6:45, 7 o'clock, you're digging out of a hole. How many is that? Show of hands. How many are we talking about here? Rinse and repeat every morning. You trade the open. You think you're going to catch the big 100-tick run of the day right in the first 5 minutes. You load the boat. You go in there, and you just get your head handed to you. How would I know that? Because I lived that for years. People thought I was insane. My wife thought I was completely insane, that there was something seriously wrong with me. I blew up so many accounts, it's ridiculous. I lost count of them. I can't even tell you how many there were. It's ridiculous. Same thing. I'd get in the open. This is back on the trading floor. Just get hammered. Spend the rest of the morning trying to dig out from a big old hole. Trust me, I lived that. I know it. Now, how can you stop doing it? How can you stop doing it? How do you stop getting hammered at the open? Here is the first 10 minutes. Now, sure, looking back on it, you can say, an armchair quarterback kind of thing here. You can say, well, Charles, just draw a downtrend line here, and, it's pretty much kind of respecting it. Right? Every time she comes up here and kisses that downtrend line, it comes up, kiss and roll. Here's another one right here. Here's a line 2 trade. Minimum criteria met. Short. Yes, that's true. But now, if you traded this, these bars are coming in pretty fast. Hot and fast, right? I mean, this is all like spazzing around here. All this happens in like a minute, 2 minutes, 3 minutes. Bam, all flying all over the place. So here's one thing you can do. In the first, I'd say at least 5 to 10 to 15 minutes, and this is just a general rule, in this time frame right here, you need to sit on your hands on ES. Don't do anything. I mean, you can sim trade it if you want. Do some sim trading. Practice taking shorts, practice getting in and out, and don't get serious about it until after about 6:40, 6:45. Then you start looking for trades. Now, some of you might say, well, Charles, how do I know in the first 10, 15 minutes there's not going to be a 100-tick run? That's the whole move of the day, and I'm going to miss it. Okay, let me ask you this. How many times does that really happen? That the 100-tick run comes in the first 5 minutes, 5, 10, 15 minutes. The big move of the day is right here. How often does that happen? Not very often. I mean, I can just tell you straight up. And even if it does, normally there's a punch, a poke, and a run, and then a pullback to support, and it gives you a chance to get in. You're not going to miss the whole thing, right? I mean, you're going to see it. The only exception to that is that if you're in a very smooth, nice trending move. Let's say, for instance, the open comes along. Now, you can make the case. This is a pretty decent downtrend, and these were good shorts. And as I recall, I think we called them. I didn't take them. I didn't trade anything until about 6:45 when the move actually happened. Yeah, you got to look at it that way. You got to lose that mentality. I know that mentality so well. It's fear of missing out. That's what it is. FOMO or whatever they call it, right? Your fear of missing out. It's forcing you to take trades in that first 5-10 minutes that you really shouldn't take because you're afraid the big move's going to happen and you're going to miss it. Okay? All right, now moving on. Now, I'm going to extend this out and we're going to recreate the open together. And when you think something has changed in what is happening here, which is the downtrend, is the market condition, taking shorts on rollovers. We all see that. You type in a C to signify that something has changed. Okay? Are you ready? I'm going to blow it up a little bit. Okay, I'm going to blow it up a little bit. There we go. Can everybody see it? We're right at 639. You tell me when something's changed by typing in a C. Here we go. Okay, now we're at 640, 641, 642. We're 12 minutes into the trading session, looking at it together. $644. We're coming into the sweet spot where we should be looking for trades now. We're 14 minutes into the trading session. What's going on here? You got to have your spidey trading sense up, right? Okay, let me pause for a second and ask you if anything changed right here. And now when you look at it, what is this? It's a double bottom. I believe we called that in the room as it was occurring. You broke the downtrend line. The first time since 3:30 in the morning. That is significant. Furthermore, you take this swing out right here that had been holding from earlier in the morning, right here. You took it out to the upside. So these are all little breadcrumbs that the market gives you, right? The market is not going, I think some of you are the impression the market's just going to kind of grab you by the shoulders and shake you and say, okay, the trend is changing now, wake up. What else is happening on here? What was another breadcrumb? What's this? What's this color? Yeah, the background turned green. Is that a background change? When's the last time that happened? Way over here. What does that mean? It wasn't green since overnight, right? Here, the last time it was green, and it started the European session. It's been short since 3:30 in the morning. Well, now what happened? Well, the downtrend line broke. We took a swing out, and the backgrounds turned green. So let me ask you this question. At 6:44 a.m. Pacific time, were you still looking for short trades, or were you looking for something else? Right here. I'm going to pause it right there at 6:44. Right here now. Are you still taking shorts, or are you looking for something else now? You're going to start looking for longs. Right. You're looking for a pullback to get long. Right. By the way, if you came in late, don't worry about it, especially if you're on an open house and visiting. Don't worry about it. I see a ton of people are still coming in. We are recording this, and we're going to send it to everybody. So don't worry about it. Some of you have missed half the session, maybe more of it. It's okay. We recorded everything. We'll send it to you tomorrow morning. Yeah, okay, so we see, okay, the downtrend line was broken. We got a clear double bottom. We've punched up through the swing. The background has turned green. We're looking for long trades. We've gone 14 minutes. We're in the sweet spot of starting to look for stuff, right? Market's slowed down a little bit. All those algos and orders have flushed through the system. Where might we find a trade on this chart to get long? It's going to pull back and give us a long trade. Where might that be? Now, when we say that, we are asking you to do what? What are you doing when we say, where might the trade be located? Right. We're asking you to project out beyond the right edge of the chart. You are projecting out in anticipation of what could happen next. And the reason you do that is because you want to be prepared in the event that it happens. Right? In my view, this is not a phantom trade. Somebody typed in phantom. I think, I don't want to get into the intricacies of it and throw us off track where we're going with this. I would submit to you that if it held this resistance level right here, somewhere around line 6, if it kissed this and rolled and gave you a short, you can make the case that's a phantom. But it's gone well beyond that. It punched right through the swing. The background's turned green. Trends are changing. You have to be able to quickly identify a trend change. That's going to help you so much. If you practice that one thing along with mid-band trades, it will really help your trading a ton. You got to be able to quickly tell when the trend has changed. Many of you typed in that I would like to see a long trade set up on a retracement back into the mid-band. Perfect. And that is defined in here, right? When we say this is a mid-band trade, the mid-band itself, the band above, and the band below. So what we're saying, to be clear, is that even though at the time that we envision this, and you're probably hearing calls in the rooms to the effect of, if that ES pulled back anywhere between 72, 73, 74, in fact, I think I said that in the room, as I recall, what we're saying is this has not happened yet. But if this happens, and it bounces, we are going to take a long trade. This is where a lot of traders really struggle. How many of you are able to successfully do that? To project beyond the right-hand side of the chart, to listen for numbers in the room of support and resistance, and try to really visualize where that next trade is going to be so that you can prepare to take it. That's what this is. Visualization, projecting out into the future on something that has not happened yet, but you're waiting for. Mario says, I'm working on it. Louis says, I'm starting to do it now, but it took me months to learn how to do. Mindy says, I still feel like I get a little bit too early and a little bit too late. Okay, that's okay. I try to do that daily now. Toby says, sometimes I do it, but not consistently. Davin's working on it. Chuck says it's a work in progress. So this is really important, okay? This projection thing that I'm talking about is extremely important, and it really takes some work to learn how to do. But that's the other thing, aside from knowing your numbers, focusing on the trades that you're good at, on the instrument that you're good at. Yes, those two work together. Like you could be a good mid-band trader, and you try to go trade gold, and gold just hands you your butt. Right? Now, does that mean you're not a good mid-band trader? Is that what that's saying? No. It's saying that your skill set is not compatible with gold. And if you ran the numbers, you'd know that, right? Let's say that you're a good phantom trader. You just see phantoms all over the place. They just jump off the thing and you just nail phantom trades. And then you go to trade crude, and every phantom trade you trade just hands your head to you. Well, then maybe crude shouldn't be an instrument you're trading. So you're going to marry your skill sets. This is the mating dance of the trading, right? You're gonna match your skill sets, which equals trade types, right? And that's basically what we're saying, trade types that you've identified on your charts, right? Trade types with your futures instrument. This is what the process of experimentation is all about. Another good example is Spazzy Nazi. Remember we had NQ in the room for a long time? We had YM in there too until it got us all kind of spastic on us. What was happening, if you recall, is those algos were taking the retracement way up. It looked like a trend change, and they'd flip and slam it right down in your face. The NASDAQ is notorious for that. So here's the thing. Even if you're a good mid-band trader, it'd plow right through it and wipe you out. Yeah, so you don't, here Lewis is saying, I found that I love crude, my numbers are good, and I stay with it, and that's what I trade. Good for you. That is the goal. You've got to find the instrument to match to your skill set. Whatever trade types you're good at and the market behaves, that's what you stick with until something changes. Okay, that's really important. The projecting out is going to take a little bit of time for you. We try to help you in the room by, anticipating where markets might go. And Gary puts lines on. We put little boxes everywhere to help you see it. But you really got to develop that skill set yourself. Okay? Now, I'm gonna advance the chart, recreating real time together with you all here tonight. And when you think the trade is set up to take, you type in a T. All right? Here we go. Okay, now that's a good point here. Dave has said something noteworthy that I think we need to share with the team. He says, sometimes when I'm in the room, I get a little confused about what instruments you're talking about. Okay, so let's talk about, I want to just hit the pause button for 2 seconds because that's an excellent point. A lot of traders, when they get sort of ahead of themselves, Kathy says that happens to me too. Here's how you do that, and it takes a little bit of time to fix, but you can do it. It's called selective hearing. What does selective hearing mean? Okay, so you're in the room, and we got what is it? Russell in the upper left, ES in the upper right, gold bottom left, crude bottom right. 4 charts. Gary and I are sharing responsibility calling trades. Lately, he's been calling more Russell trades than me. I've been calling a little bit more ES trades, and we share kind of gold and crude when we can. Let's say that you're trading the Russell that morning, okay? And you hear a call on ES come up. Do you care? You're trading Russell. You're only trading Russell. You're focused in on that Russell chart. You're looking for good setups. And an ES call comes in. Does the ES call have anything to do with you trading the Russell, yes or no? No. Okay, you're trading, let's say hypothetically tomorrow morning you said, okay, this morning I'm going to focus on ES trades. I'm going to see if I can make money trading ES. And then, 5 minutes in, a crude oil trade call comes in. Do you care? Does it have any impact on your ES trades? Trades related to crude or gold or anything for that matter. So that's what we call, and I'm not making this up. I used to say this all the time. I'll just put it right on here. It's called selective hearing. You listen to the calls on your instruments only. You got to work on that. If you're finding that other calls on other instruments are throwing you off, then you got to learn the skill set. You got to really learn the skill set. Only in caps. The other ones don't matter to you. And here's another thing, and I know some of you might still be doing this. Most of you are not doing this anymore, but the thing you don't want to do is, let's suppose you're trading ES and you're watching it and you're hearing some setups. Maybe you took a quick little trade or two, and then all of a sudden you hear some kind of killer call on crude, and then you go try to get a crude chart up and you're trying to chase it, start to look at what the call was. Well, the move's already happened. You missed it. You can't do that. You can't do that. You have to decide what you're going to trade for the day and stick with it. If you're going to change, you can't go chase a trade by pulling up a chart after it already happened. And most of you, frankly, to be honest with you, should only be looking at 1 or 2 charts. Is anybody in here looking at more than 2 charts? Now, if you come in and you say, look, Charles, I trade 4 markets and my win rate is 78% and I can handle all 4 at any given time because I've been trading for 10 years. And I make money pretty much every morning doing it. Well, then more power to you. Don't change your screen setup. If you find that you have a bunch of charts up and you're getting confused and you're missing trades and losing on the ones you take, you need to cut that back. You need to look at one or two trades. Look at Lewis. He only trades oil. You don't look at anything else. You think if you only traded oil all morning and all day long that you get pretty good at it? If you liked it and the trades were good? Yeah. You think so? How about ES? I've been trading ES for years, every day, every morning for years. And sometimes this thing moves and I can feel like what's going to do next. Okay, good. Now let's advance this. Ready to go? Here we go. Okay, remember you're going to type in a T when you see a trade setup. Here we go. 645. Blow up the bars a little bit more for you. 646. 647. Typing in a T when you see a trade setup. 647. 648 coming up. 647. 648. Okay, I'm going to stop it there. Out of this entire room, with everybody that's in here, I'm going to count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's all the people that typed in a T. That's amazing. We drew it ahead of time. I mean, we said this is the sweet spot. I even put a box here. We said that if it comes anywhere back into this mid-band area on a retracement from this move, we talked about it ahead of time, and here today it came right into it. I mean, it doesn't get any better than that. It just came right to it. This would be the poster child for all long trades in the world right here. I mean, it was just a textbook mid-band box bounce in an uptrend change. It doesn't get any better than this. This is about as good as a trade as you're going to find anywhere. Everybody in this room tonight should have typed in a T when these bars formed right here. Everybody. Now, this happens a lot. This ABC pattern happens a lot. Here's an example right here. Here's the A. Here's the B. And here is the C. So looking now at the ABC pattern, which sometimes you get, you don't always get it. Sometimes it comes a little deeper back in the box. Sometimes it goes a little higher. Was there a secondary spot to enter this trade on the ABC? Yes or no? Right in here. So you missed this box. You fell asleep. You were petting your dog. I don't know. You took a sip of coffee. Whatever. You missed it. You missed the box. You just missed it. And all of a sudden it shoots up here to 76.50, hits this swing, pulls back right to the top of the box. And let me just help you out a little bit to visualize this. Was there another chance to get in this trade? Yes or no? Yes. Right there. 2 chances. That's why I was looking for when I was doing the advance in the chart. And it hit right here. And 10 of you who typed in the T, you obviously saw this. Came right into the sweet spot of opportunity. This is why you do the projection forward, by the way, in anticipation of it happening, so you're not a deer in the headlights when it sits right where you should be taking the trade. And we're calling it out in the room, take a long at 73 bounce at the mid-band. Sure enough, the thing pulls back and gets a higher low right above the box. Now let's see what this trade turned into. You can add there, Mario. Yeah, you can add there. That would be a spot to add, absolutely. So you put 1 or 2 on here and you want to put a 3rd or 4th lot on the pullback? Absolutely. Or an entry if you missed the original entry. So let's watch this thing go. Comes up, pops. I was calling out numbers out here. Do you remember? Remember these numbers? 79, 82, 84. Anybody remember those? I was taking profit. I loaded for bear right in here. I loaded for bear. And I was peeling all the way up, trailing my stop. Here's your trail stop. Now, I'm going to talk about the trail stops in a second. Let's talk about the trail stops. So the way this works is if you put an object trader box here, as I've shown it, and you use OT tool, you're filled long on the close of this bar right here. All right. Now, generally the way we teach this is that on ES you can go anywhere from 4 to 8 ticks to take your scalp trade off. Now, I don't know if you got it here or not. Let's take a look. You were filled long at 74.50, and it wicked up to 76.50 and a quarter. You know, if you had a 4-tick scalp, you might have gotten it. It looks like it went almost 6 ticks. But you definitely got 6 or 8 ticks here when it came back to the top. So the prevailing teaching that we do is if you're going to put 2-lot on, and your initial stop is 12 ticks below your entry, so that's located down here. Object Trader all puts it on the chart already for you. You don't even have to do that. And you can set it up to manage the trails too, so the trail would just follow on up like that. Now you can see that we have the green stealth, the snaky line, and line 6, which you'll notice when we call out trail stops, generally you're going to follow this. Tight would be when you put your stop right on line 6 or even higher. That's called tight. Mid-band trades are absolutely my favorites. That's pretty much almost exclusively what I take. Unless you're in a powerful downtrend or uptrend and you get a shallow retracement that comes in between line 2 or line 6 in the mid-band, I will occasionally take that. This is high probability stuff for me right here. That's why I wasn't afraid to late. You were in the sweet spot of time. You were 644, 645, the time when the market's going to move and give you a clear direction. It worked itself out of this downward crap chop double bottom thing here. This is the time to get hot. This is when you're going to make your money right here. This is it. This is all-star time. You're in the World Series and you're standing at the plate and they're throwing a fastball down the pike. You got to poke at it, hit the ball, and run. If you're asleep in this thing, you're going to miss it. Now, here's the thing. When you hear in the room, you're going to hear loose stops. Loose stops are going to be generally close to or around the mid-band on the trail. Now, notice here, if you keep it tight at line 6, the distance between where the current price is at 81 3/4 and back to here is a full like 8 to 10 ticks. This is called drawdown at the end of your trade. The drawdown at the end of the trade is where the market has gone to and then retraces to stop you out. So this little chunk of change is what you leave on the table if you have a loose stop. If you go even deeper down to here, you can give as much as 15 or 20 ticks back. A lot of people don't like to do that. If you don't like to do that, then the only way to do it is you trail your stops up, you keep it tight, you get out, and then you wait for a pullback to get yourself back in. Okay? You're going to have higher trade costs because you're getting in and out, in and out, in and out, whereas the looser trader is doing the opposite approach. The looser trader, here's what you're doing, is you see swing levels here. You see them at 79, you see them at 80, you see them at 84. If you have multiples on, you just take profit here. You put profit targets all the way up, all the way up. You leave a loose stop, loose. And then as it goes bam, ba-bam, ba-bang, ba-bam, it's hitting all those things and it's taking your contracts out. So you're making money on the movement up in the direction of the trend. Now look at what it does right here. This is where I got popped. I got popped right here, and I never do this. It's very rare that this happens. I normally have really loose stops. So for instance, you can see line 6 is sitting here at 83.50 right here. And I always say fade that by, you guys have heard me say this a million times in the room. You want to fade that by 2 or 3 or 4 ticks. So what am I talking about? What I'm talking about is I rarely ever put the stops right here at stealth in line 6. In this particular case, I did. And it popped me. I should have had it down here because look what happens. It sits there. In fact, I remember at this time, Gary put a line right here. Remember? Everybody remember this? I do. He put a line right here. He said, there's your support. So with the loose stops, this was one continuous trade. Now, there was another, let me ask this question, make sure everybody's awake. Does this meet the minimum criteria for trade reentry right here, yes or no, on this retracement? Is this a legitimate long trade, these bars right here? I'll give you 5 seconds. You should instantly know on this pullback right here. Is that legit, yes or no, on ES? So type in a Y, type in an N, and whatever, cast your vote. Time's up. Yes. Close below stealth, check mark 1. Close below line 6, check mark 2. Sufficient retracement. This is what I was telling you about. These kinds of trades are okay to take. They're very low risk, especially when you get a powerful uptrend like this. And as I recall, Russell had already run like 80 ticks. I mean, all of them. Nazi was running. YM was on fire. They all were running. Everything was in sync. So when you have powerful uptrends across the board in the equities, it's pretty safe to jump in on a shallow retracement like that. Now, I'm going to advance this chart, and let's suppose you missed this box. You tell me if there's another chance to get in this trade. I'm going to advance it in real time. Let's pretend this is how we're sitting watching it together this morning at 6:52. When you think you see a second chance to get in, and you think you see it, type in SC. Here we go. And blow it up a little bit, make these bars really super big. Remember, SC, second chance. Okay, let me advance the chart. We're at 6:53 a.m. Pacific. We've been in this trade for about, not quite 10 minutes, but about 8 minutes. 6:44 set up to here, well, no, 11, no, right? No, 8 minutes, 9 minutes. Okay, so here we are at 6:53. There was our box, our minimum retracement, yes. Looking for a second chance. Okay, I'm going to stop it right there. Right. Total kudos and gold stars to all of you. Yeah, look what it did. This is beautiful. This is another ABC. If you learn these ABCs, man, they are money. I am telling you, I can't tell you. If you learn this little pattern, this little ABC pattern, you're going to get tons of secondary entries. Does this mean it? Are you below line 6 and stealth? Close. Yes, yes. Check, check. Almost right back in the box. If you were sleeping here and you awoke from your slumber, got out of your bed, put your trading chart on, and you missed that box, and all of a sudden you saw this, yes, that was your second chance right there. It was beautiful. It happened like a minute later. Good, you all got that. Kudos. All right, let's follow up. We're getting long in the tooth here. We still get a little bit of a late start, so we'll keep going here, okay? Let's just follow this trade out. Follow this trade out. Was there another place to get in? Third chance, maybe? Takes that swing out. Let's investigate. What is happening right in here? Tertiary shot at the trade? And then... Now that one's tight, because you're just right below stealth and right below line 6, so that's a tight one. These two are better. Yeah, that is a tertiary. That's a third shot at it. And then she just takes off like a bullet. I mean, the buy programs were so in control. And you know why. Everybody knows why, right? The market was just ridiculously oversold. The sell programs this week have taken out, like, I don't know, 2,000 points out of the Dow. It's just ridiculous. And when it's oversold like that, the buy programs just can't get in. They run it right back up. That's exactly what this is. This isn't humans. You know that, right? This isn't humans doing this. This is all computers. All algorithms. And your final stop out was up here. We're the little sardine riding on the back of the big honking 500-ton blue whale. We're just clinging to the fin. You know, he's swimming like 100 miles an hour, and we're just grasping for life. We're a little crusty crab skagging on the side of him on a barnacle. Huh? That's what we are. These guys are pushing hundreds of thousands of contracts through here. It's big money. I'm not kidding you. Billions of dollars flowing through here in these buy programs. I'm telling you. Now, okay, let's summarize this trade. And let's do it in two stages. Let's call it a two-step trade. Let's say you got filled on leg 1 here at 74.50. Here, let's do a little quick math together so we'll get this, and then we're going to wrap it up, okay? So you were long 74.50. And then you stopped out of the first one at, I don't know, say you got it 83.50. So the stop was 83.50. We'll call this leg 1. Let me get a sip of tea here real quick. Stand by 1 second, please. Okay, so we're looking at ES long trade. Just stick around. We'll wrap this up. What did I say you got out at? 83 and a quarter or something like that? I think it was, right? Excuse me. Got a tickle in my throat. So how many ticks was this first leg worth? Well, it's almost 9. 9 times 4 is what? Total leg 1. 35 ticks, right? All right, so that's leg 1. Just to be clear, you were filled long on this bar right here, and you got stopped out at line 6 right here. It was 83 and, I don't know, 83.50. 36 ticks. It was right at 9. How much was leg 1 worth? How much is a tick worth on ES? So if I go multiply here times what? I have to put a numerical value in here for what a tick is worth on ES. Does anybody know what ticks are worth on ES when you trade it? If you trade it, you should know it, obviously, right? Yeah, so it's $50 a point and 4 ticks a point, so it's $12.50 per tick. So how much was leg 1 worth in dollars? There was 36 ticks. Sorry about that. Right? Is that right? 9 times 4, right? 36. How much is that? For one lot, one contract. Just one contract, one trade is worth how many dollars? From here to here. First leg of the long trade on ES. Well, it was 9 points. 9 times 50 is how much? Last time I checked, it's $450. So that's leg 1. And then we say you re-entered. Let's say you didn't get back in until, say, close of that bar there at 83.75. So leg 2 starts at 87. Leg 2 starts at 80. What did I say? 83.75. Okay, you re-enter, and you catch the next leg up to. You didn't get out all the way until up here at 90. Let's use a round number. 83.75. I don't know. Let's say 93.75 just to have a round number. And you exit at 93.75. So how many ticks was the second leg worth? Anybody? Leg 2. Well, it's 10 points times 4 ticks per point. 40 ticks. 40 ticks times $12.50 a tick is how much? What was leg 2 worth? $500. Okay, I gotta fix this because there's something down below here. I gotta put leg 1 back up here. Somehow I got pushed down here. Stand by. Just give me 1 second. I'm going to pull all this together and we'll wrap it up. All right. So in summary, here's what happened on ES right here. Okay. Oops. Sorry, I'm not the best with some of these things sometimes. There we go. I got it. There we go. Okay. So if you took the trade as we have illustrated here, using a 1 lot, and you caught leg 1 for 36 ticks as we showed, and you caught leg 2 and trailed it up and got up here, less commission, you made somewhere around $950, almost $1,000 on 2 trades. And you start getting into the trade here around 645, 646, and you stayed in till 708, 706. This whole entire trade that made you almost $1,000 on 2 trades where you felt absolutely no heat at all was 20 minutes. $1,000 in 20 minutes. If you put 2 contracts on, 2 here with entered, and you trailed it up as we showed, you would have made somewhere right around $1,900. Now that's what we're talking about, some chicken dinner. Now look, we are at a period here in October, and this happens every year. For 20 years, I've seen the same thing. October is seasonally very high volatility. Extremely high volatility. Big swings up and big swings down. So what I'm telling you, to be clear, is that you're not every day going to get 100 tick moves on ES. Pretty rare. 75, 80 tick moves like this. They happen, but not very often. Seriously, not very often. But, there's been quite a few days this week where we've seen moves that were, 25, 30, 40 ticks. And then maybe you get a 20 or 25, 30 tick follow on. So, there's been some decent moves. Ken is saying, how many lots should we put on here? Well, that's a function. Your trade size is a function of your account size, right? You have to look at how much risk you can put on, what the potential loss is on the drawdown, and then you back calculate your maximum contract size. So based on what you do that formula. It tells you how many maximum contracts you can put on. It's based on a drawdown against your trading account size. That's how you back into how many contracts you can put on. All right, so that's a wrap. Thank you for coming, everybody. I'm going to turn off the recorder.